Laszlo Birinyi, president of stock market research firm Birinyi Associates, called the current bull market. He says he's convinced it'll continue into 2010. Laszlo joins us now from his office in Connecticut. Good morning. Thank you for joining us on the program this Christmas Eve. Laszlo, let's start with the fact that you are bullish on 2010. You arrive at your conclusions by looking at historical precedents. So what kind of themes do you see out there for the coming year?
Well, I see basically a continuation of what we've seen for the last 9 months or so. Strength continues to be concentrated in good stocks. People continue to be skeptical. The economy is going to surprise us, and technical stuff isn't going to work. And I think there's going to be more and more of a drift back to stocks because people realize alternatives aren't happening, and the negative case is not all that compelling.
What about sectors? We've heard a lot of people argue for the fact that materials, energy, industrials, financials will be leading the way in 2010. Is there credence to that idea, to going back to the cyclicals and betting on the sector that let us down to lead the rebound?
Well, the problem with that scenario that I see it is if you calculate, you're talking about 65% of the S&P or so. So I think one of the things you've seen so far is a very much of a broad-based market. The only sector which is really not in a rally right now is financials. And all the other sectors, in fact, 6 of the other 9 sectors are historically overextended, but that's how the bull markets begin.
Okay, let's look at the skeptical side of things, because the bears have long argued that all the liquidity in the market that we're seeing is temporary because it's engineered by the Fed and other central banks. And also, consumers and companies need to continue to deleverage. Won't this continue to be a drag in the coming year as well?
Well, one of the things that I always focus on is what's going on in the market, and the market's telling me a different story. We have been passing around to our clients one of the most fascinating articles I've ever seen. The October 1st, 1982, Sunday New York Times had a long, in-depth article arguing that the economy was in trouble. We had a new president, unemployment was 10%, housing was in the tubes, and nobody was buying cars. And that only because of some inventory restocking did we have any kind of growth in the economy. And that the best case scenario was a couple more tepid growth, a couple more quarters, and then the economy would tank again. Over the next 6 quarters, the economy averaged a 7.5% growth. So I think everyone continues to look at the empty half of the glass and not at the other side.
I know that you look at historical precedents. A lot of people say it's different this time. This is a different market. We haven't seen this level of government intervention before, the scale of corporate failures before. What's the argument for making these historical comparisons?
Well, it's always different. We've looked at all these bull markets. We've done more in-depth studies on market history and cycles than anyone. And every market is different. And so to me, again, what is going on in the market? People are concerned about housing. NVR has been up 40 points the last 2 days. And that tells me more about housing than retailers or what sales are doing and the like. And there's always a negative case. But again, the market is always looking ahead.
Okay, that forward discounting mechanism at work. Laszlo, what in your mind are some of the biggest misconceptions out there about the market's current run this year?
Well, I think that we put out a piece a couple of weeks ago called Oxymoron, e.g. stock market research. We don't really understand we don't understand the stock market as much as we think we do. How many people suggested to us that the market is due for a correction? At this point in the cycle, the market corrects. The market could correct, but if you go back to 1982, we went 14 months before we had our first correction. Off the 03 bottom, we went 5 years. So this thing that is due, and the contention that you have some sort of rotation. Rotation, and we've looked at it in depth, exists. However, it's totally random. So a lot of these contentions that what the market does or should do, the fact that we should now go into companies with good earnings, and yet you look in the market like yesterday, what was leading the market? Google. And so I think that people get misled by a lot of trying to be too cute instead of trying to stay what's really happening and stay in the right path.
Laszlo, very quickly here, what about external shocks like the Dubai near default, the Greek downgrade? What do you see for 2010?
Well, first of all, we've always felt that financial shocks are not really necessarily that length in duration. So I don't know what kind of shocks will be down the system, but right now, to us, the strongest force in the market is momentum, and momentum is going up.
All right, we thank you for your time. Laszlo Birinyi, president of Birinyi Associates, joining us from Connecticut.